Good morning, this is Larry Edelson for Uncommon Wisdom video for Thursday, September 10th. I still have an echo on this software. I'm trying to debug it. I should have it fixed for you by next week, so bear with me. I hope the echo isn't too bad for you. Anyways, I hope you also had a nice holiday weekend. We're back to business here in the markets. Volume and liquidity has picked up dramatically, and we're starting to see some more important moves develop, in particular in gold. And I want to call up the chart action in gold for you right away, because over the last 2 weeks I've been showing you on the charts a triangle type formation in the gold market on a daily bar chart. And I've been pointing out to you that the market could break to the upside, although I was slightly bearish there and expecting it to break down to the downside. As it turns out, on Friday, just before the holiday, and this past Tuesday, right after the holiday, gold did blast off to the upside through that triangle formation. And I want to show it to you here. I am not, let me repeat that, I am not convinced this is the major breakout in gold, and I'll show you why in a minute. But first, let's take a look at that triangle formation that I've been showing you over the last 2 weeks. You can see it right here. I'm going to move it across so it's very visible. These are the same trend lines, cyclical channel lines that I've shown to you in the past. I still have them up on this daily bar chart of gold. You can see this is the last couple of weeks where I was showing you we were coiling up, getting ready for a big move. For many reasons I thought the move would be to the downside. I was wrong on that. We got a thrust to the upside here in gold. We've broken out of this trend line. We've also, importantly, a sign of strength, broken to the upside through this rising trend channel here, which is an acceleration of short-term strength, and indeed quite a breakout. I want to zoom out on it a little bit so you can see a little bit bigger picture there. You can see the last high back here, and I believe it was in February, late February of this year. We got up to about $1,007, $1,008. We're just about there now. And we thrust right through this trend line and through the upper boundary of this rising cyclical trend channel that I've shown here. It is indeed a strong short-term sign of strength, and it is in keeping with the long-term, which is very, very bullish for gold. Let's zoom out of this for a minute. I want to show you something else that makes me a bit cautious here in gold. Not completely convinced that this is the big breakout. This is a weekly chart of gold here. I have not drawn any important lines on this yet. I will in a few minutes for you. But this is a weekly chart. It's not too different from the daily chart. You can see a sort of triangle formation here. Let me draw it in for you so you just see. You can see a very simple triangle formation. Looks very similar to the daily chart, and we're getting this breakout here. That is also a bullish pattern on the weekly chart. However, there's a couple of standard things here I want to show you. You can see that we haven't really broken through this cluster of highs here. We had 1, 2, this is the third high. So we're coming into some resistance here. Before we get to the all-time high, which is 1,034 or so last year, gold needs to decisively push through this before really taking off to the upside. And so far it has not done that. So if I, as a trader, I would not be taking aggressive long positions here. As an investor, I'd be holding my core gold positions from way back. But I would also, as an investor, not be buying more gold here. I would wait for a successful pullback of this area in here that holds support on the daily and the weekly chart, and then see gold start to rally again. Then I'd be more convinced. Or if we got a successful close on the weekly chart here above this cluster of highs, these 3 highs here, then I'd be even more convinced. Something else I want to show you on this chart here is a cyclical trend line. If we take this major high here and we go back to the major high previous to that, there was one here, I'm taking this one because it was really clearly decisive action here from which the market pulled back and then took a while to make a substantial new high. So I'm going to take this high here, which is clearly a cycle high of significance, and I'm going to take it over to this post-high low, which is also a cyclical low of clearly some significance here, the reaction from this high. And next I'm going to draw a parallel off of that and pull it up to this cornerstone high here from which this previous high and reaction low is drawn. And I want to see how the market is reacting. It too, gold has broken, as you can see, above this cyclical trend line here, this cyclical channel. So it is starting to form a new channel to the upside. It's basically saying to you, okay, all this past price history here is past history now. Let's see where we can go at a new price level here. Can we make it to the upside and create a new trading range at a higher level for gold? That's what gold is doing right now. And can we sustain it? It's too early to say for sure, and that's why I'm exercising some cautionary statements here. I would not get aggressively long or add to any core gold positions here just yet. This could be a fake out move in gold. It's a sign of strength. It's a sign of longer term strength. It's in keeping with the longer term trends. However, gold has an uncanny way. Take it from me, because I've been trading the gold market for 31 years. Has an uncanny way of sucking people in at the worst possible time and doing a lot of what I call head fakes. This could be a head fake here. We could easily see gold go sideways and get all the new buyers frightened. We could see gold pull back sharply, even back down to the mid 800 levels. My original target for a successful test of support scare the bejesus out of everyone who's recently bought gold and then take off to the upside. That's the personality of the gold market, and I know that very well. So that's why I'm exercising some cautionary statements here, and I want more proof before I emphatically say, yes, gold's next bull market leg has taken off. So with that, I'm going to close this chart here, and I'll be watching gold very, very closely. I'm going to minimize this daily chart and talk about a couple other markets. The dollar is weakening again. That's one of the reasons gold has spiked to the upside. I'm not surprised with the weakness in the dollar. On the other hand, like gold, the cycles, which I don't have available to show you at the moment, the cycles in the dollar do not support a crash in the dollar at this time. Both the moves in gold on the upside and the dollar on the downside over the last few days are not supported by the cyclical timing methods that we've studied at the Foundation for the Study of Cycles and that I've studied. They say that this is not quite the time yet. In fact, we're really about a year away from the big moves down in the dollar and the big moves up in gold. Cycles aren't always right, but the evidence that I have says that this is not the big next leg down in the dollar and not the next big move up in gold. Onto the Dow right now. The Dow is holding quite nicely. I expected it to pull back a little bit more last week than it did. It hasn't. We may still yet see a pullback there. However, the short-term cyclical picture in the Dow and the broad stock indices continue to show higher prices for the next several weeks. Don't run out and buy stocks based on that statement. You know, stay tuned to my suggestions in Uncommon Wisdom and my specific recommendations in Real Wealth Report for better timing on that. But the winds are still in the sale of the stock market here. A few other things. Oil has been moving higher naturally, to be expected, along with gold. They're kind of trading in sympathy with each other here and contra dollar. We've seen oil get back up to about 72. We have an OPEC meeting. There's not been no major policy changes by OPEC. Basically, this is all dollar related here, and from a macroeconomic point of view, we're seeing investors worldwide pretty much think that most of the risk is behind us on the financial crisis, and therefore they're starting to take on more aggressive positions in the markets, resuming the downtrend in the dollar, selling the dollar, going into tangible assets, hedge type investments, and reflation type trades. That is the long-term trend. The question continues to be the short-term, whether or not we're seeing a solid resumption of that reflation trade or a short-term fake-out. Stay tuned. There's going to be lots of action in the next few days, and a lot of critical developments. We'll know within a couple of days whether these are real short-term moves or just, as I